What should one know about the 314% Fibonacci extensions? What should one know about the 314% Fibonacci extensions? Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for Fibonacci trading. Our website is www.dayprotraders.com. All right. The title of the video is What Should One Know About the 314 Fibonacci Extension Level. Okay. We are looking at Netflix, a Netflix stock on the monthly chart. Netflix is an American stock listed on the Nasdaq 100. Okay. The APX NFLX November 4th Lima X-ray. We are on the monthly chart. Okay. As you can see, Netflix stock, okay, pay attention carefully here, went up from 2009, okay, up to this level here in 2011. All right, and then the price went down to this level, and then the price is now going up. Okay, using the Fibonacci extension tool, the price is now in the zone of 314% Fibonacci extension level. All right, this is the line here. I'm going to color it now into pink to please the beautiful ladies. All right, so pay attention carefully on the monthly chart. You can see that the price is in the zone of 314% Fibonacci extension zone. The price level is a 136.75. All right. The Fibonacci extensions allows traders to detect, or to uncover hidden support and resistance levels. So if the price has been going up for some time, and we do not have any visible or obvious resistance level, we can use Fibonacci extensions, okay, to highlight a hidden resistance level. On the other hand, if the price has been going down for some time, and we don't have any obvious or evident support level, we can use Fibonacci extensions to highlight hidden support levels. It's a powerful tool to detect key levels. All right. So how do we draw the Fibonacci extension? Okay, we start from where the price has ended, and we bring it down to where the price has started. So you can see that the price has started going up from here all the way up here. If we're going to draw Fibonacci extensions, we will start drawing it from the ending point to the starting point. All right. If you want to know more about the Fibonacci extensions, go to www.dayprotraders.com and click on Fibonacci extensions. All right. So now the price at 314 Fibonacci extension level. The level of a 314 Fibonacci extension level is considered as overbought zone. So any financial instrument that has been going up and then a pullback, if it continues to go up and reaches the level of 314 Fibonacci extension zone, okay, the general belief is that the financial instrument is overbought. So if you see on the hourly chart, okay, it's a short-term overbought. If you see on a weekly chart, that's a medium-term overbought. If you see on any time frame that is higher than the monthly chart, it's a long-term overbought. But how, okay, do we, okay, trade, okay, the 314 Fibonacci overbought zone? This is about what one should know about the 314 Fibonacci extension level, okay? So now the price at a 314 Fibonacci extension level is overbought zone. What do we see? What kind of pattern are we likely to see in overbought zone? We are likely to see bearish chart pattern. We are likely to see, okay, bearish candlestick pattern. We have one that is developing here. We have a doji followed by a bearish candle. This candle here is the month of September 2015, because today is the 27th of September 2015. This monthly candle is not yet closed. So this bearish candlestick pattern is not yet completed. We will wait until this candlestick bar is closed. Then we will have a doji and a bearish candlestick pattern. So when we see a bearish chart pattern or a candlestick bearish chart pattern at overbought zones such as the 314 Fibonacci extension level, that will constitute a bearish trade setup. On the other hand, if we see a bullish chart pattern at a 314 Fibonacci extension level, or we see a bullish chart pattern at a 314 Fibonacci extension level after the price has been going down, that will constitute a bullish trade setup. Okay, it makes sense? Let me write something here for myself, and then we will continue. Okay. All right. So when we see a trading setup, either bullish or bearish trade setup at a 314 Fibonacci extension level, what do we need to do? Okay. So once we see either a bearish candlestick pattern or a bearish chart pattern developing at 314 Fibonacci retracement level, extension level, on a higher time frame, I will say to traders, look for this setup on a weekly chart, monthly chart, quarterly chart, a yearly chart. You may see it, on a daily chart, hourly chart, but be careful when you see on the lower time frame like daily chart, hourly chart, 2-hour chart, be a little bit cautious, The base 314 overbought or oversold very often will appear on a monthly chart, but at least you can use weekly, monthly, quarterly, a yearly chart. Once we identify either bearish candlestick pattern or a bearish chart pattern in the zone of a 314 Fibonacci extension level, the next thing that we need to do, this is a trading setup, we must apply a top-down trading method. I will recommend to traders to watch the video that we call, what is a multiple time frame trading method at a 2-4 stock trader. Check it out. What is a multiple time frame trading method by 2-4 stock trader. All right, so you may know exactly how to apply a top-down trading method. Because we are on a monthly chart, talking about a top-down trading method or a multiple time frame trading method, we will combine the monthly chart to the daily chart, and then we'll combine the daily chart to the hourly chart. So our trading setup is taking place on a monthly chart. It's not yet ready. Looking at a bearish candlestick pattern, we'll wait for the month, very, very important, for the month of September 2015 to be completed. If we see a bearish candle here, that will form, a bearish candlestick pattern, a doji followed by a closed, bearish candlestick, When we see that on a monthly chart, as we see now for a Netflix stock, we go to the daily chart because monthly, daily chart for the signal, hourly chart for the entry. This is one example of a top-down trading method combining a monthly chart, daily chart, and the hourly chart. So we switch to the daily chart. We are looking for a signal, remember, We do not want to violate the market pattern on any time frame. So the price was in a rising channel before on a daily chart. We are at the overbought zone, which is the 314 Fibonacci extension level. We see the price in a rising channel. We want the price to come out of the channel, which it did. You see here, price is out of the rising channel. Let me call out that. I'll call out my first channel into orange to get your attention. So that's the channel I'm talking about, this channel here. All right. So the price out of the orange channel, you break below it, and then you retest it here. Break below and retest it here on the edge. This is a signal. This is a signal to sell. All right. But the signal is not the entry. One will now go from this point where I put a spot. We will switch from the daily chart to the hourly chart. This is something very important that trader must know about the 314 Fibonacci extension zone. Again, on the hourly chart, we will draw the channel. So the channel that we have drawn on the daily chart is still valid on the hourly chart. Now on the hourly chart. So the price in the rising channel on the hourly chart, and you break below it and retest it here. So now we can enter the trade here. Now talking about the entry point, all right. if we want to pinpoint the best time to enter the trade, we can again, from the hourly chart, switch to the 10-minute time frame to pinpoint the best point to enter the trade. But hourly time frame, what we said, monthly chart, daily chart, hourly chart. The hourly chart for the entry. But if you want to optimize, okay, our entry, we can again go from the hourly chart to the 10-minute time frame. Again, we will draw the channel and look for, okay, a best place to enter the trade on the 10-minute chart. And then we will be in the trade. The best place to place our stop loss is above the high on the signal time frame. Here it is. This is the signal time frame of hourly chart. We place our stop loss above the high on the signal time frame. So a swing trader will enter the trade here. It's not yet finished talking about what one should know about the 314 Fibonacci extension level. The 314 Fibonacci extension level is not a magic level. It's a very important level. Very often financial instruments that have been going up for some time, reaching the level of 314 Fibonacci extension level, are considered as overbought. We are looking for bearish trade setup. We'll validate the trading setup on a higher time frame, and then we will apply a top-down trading method, okay, to enter the trade, okay? All right? You see now? The next thing, it's not finished here, my friend. I wish it was finished. We'll go to Google Finance, okay? Check the financial regarding Netflix stock. We'll compare the total current assets on the annual data, balance sheet, annual data, not quarterly data, annual data. Go to Google Finance, put in the epic of NFLS, click on balance sheet, click on annual data, compare the total current asset to the total current liability. See the trend of the current asset and see also the trend of, the current liability, okay? This is about performing Google Finance Asset Test. If you want to know more about Google Finance Asset Test, check the video that we recorded at George Trio YouTube channel. What is, Google Finance Asset Test by George Trio, okay? So we want to do technical verification, okay? Setup, validation of the trading setup, top-down trading method, fundamental analysis, perform Google Asset Test, do other verification, okay, fundamental analysis, check video on YouTube about fundamental analysis, okay, is it a good time to sell or buy? What type of financial instrument is this? That's a very good question. This is a very, very bullish stock. All right. Now, anytime you want to sell a financial instrument, understand that the normal progression on the market is bullish. All right. So you need to be very careful because you want to sell. Check whether there is a valid reason to sell, especially if you want to sell and remain in place for a long time. So have a good, solid reason. If you don't have a valid, solid reason, control the risk or take profit gradually. So what do I mean by take profit gradually? You sell it here, you drop it down. So price out of the orange channel, we project the channel down. So we have a new channel right here. This is about, market geometry. So you sold it here, you can take profit here. Now, selling gradually, what do I mean by that? Now we are on the signal time frame, our daily chart. We validated our trading setup. If that candle on the monthly chart is closed this month, and we have a bearish candle, that will form. It's not yet ready, okay? But if you want to trade it like this, you know that it's not perfectly cooked, so to speak, but you want to control the risk. Selling gradually. Now you're on the signal time frame. If you did not sell it here, you will look for another opportunity on the edge of the trend line here. Sometime, because the normal progression of the market, you will see something like this. The price will violate the edge of this bearish trend line on the hourly chart and will come back up. Let me show you. And we'll go all the way up here, forming a kind of a double top chart pattern. It makes sense? So the key point to understand is that the 314 Fibonacci retracement level, if a financial instrument has been going up and pull back and continue to go up, and it reaches the level of a 314 Fibonacci level, especially on the weekly, monthly, my favorite time frame is monthly time frame, all right, and it reaches the level of 314, especially on the monthly chart, is considered as overbought. Though this method is valid on all time frame, I recommend to traders to use at least a weekly chart, monthly chart, quarterly chart, yearly chart, okay? You will see very often on the monthly charts. That level of a 314 Fibonacci extension level is considered as overbought. On the other hand, If the financial instrument has been going down before, so the bear are dominating the market, and then the price rally a little bit, and the bearish momentum continues, all right? Remember the conditions, continues, and it reaches the 314 Fibonacci extension level in a downtrend. The level of a 314 Fibonacci extension level is considered as oversold. This is just a trading setup. We now validate the trading setup on a higher time frames, all right? And then, okay, we'll apply a top-down trading method. We will not ignore the economy news, and we will not ignore the financials. One should always combine Fibonacci trading with fundamental analysis. Go to Google Finance, perform at least the Google Finance test, okay? Check the fundamental, at least read the economy news, all right? And then, okay, take it from there, gently. The setup on a monthly chart frame, the daily chart for the signal, the entry on the hourly chart. Optimize your entry, even going down to the 10-minute time frame, all right? It makes sense? It is also powerful. This is about, okay, what should one know about the 314 Fibonacci extension level? Does it mean that now Netflix will go down? Definitely. It's very simple, my friend. If it's going to go down, it will be in a declining channel. If it's not going down, it will be in a rising channel. In every time frame, we don't want to violate the three market pattern: the rising channel, the declining channel, and the horizontal channel, without assuming anything. The setup, we must validate the setup. Then we apply top-down trading method. We perform Google Assistant. We perform fundamental analysis. We combine technical analysis with fundamental analysis. Now, you may say to me, George, that's enough now, okay? Professional will go a little bit deeper, okay? Because Netflix is listed on the Nasdaq 100, they will now use what we call the trading triangle. The market first, the sector, before the individual financial instrument. Here, the individual financial instrument is Netflix. If we like to talk about the sector, all right, generally, in this case, we'll say Nasdaq 100 itself. So we want to check what's happening with the Nasdaq 100 itself, the index, and then we'll check what's happening with the S&P 500. So we may align our strategy. We don't violate the trading triangle. We don't violate the market pattern. We apply a top-down trading method, and we also pay attention to the economy. Is that too much? Okay. If that's too much for you, at least start improving one step at a time, and by the time you know, you are there fighting or competing with the best traders out there. If you find this video useful, do not get too excited. Take it one step at a time. Practice will make you better. There is no, trading strategy that will guarantee a profit, or a trading strategy that will give you 100% winning rate. If you are new to the market, know that in every trade, in every strategy, there are risks, and it's how we manage the trade, how we enter the trade, and then how we defend our positions. It makes sense? It is also powerful. All right? If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down, okay? If you love it, all right, feel free to share it with your friends on Google+, on Twitter, and also on Facebook. If you love our videos, okay, now is your chance to subscribe to our channel, so you can, stay tuned with us and know exactly what we are talking about. You have any comment, put in the comment section. Any suggestion, put in the comment section, all right? You want us to record another video or talk about a specific subject regarding Fibonacci trading, all right? Okay, put in the comment section, and we will be recording more videos, okay, to answer, those questions. We are the TSTW24 traders, talking about, what should one know about the 314 Fibonacci extension levels. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders. Speak to you soon.